I remember Dad coming home one day and saying, "Hey boys, I bought a stone picker." And we're thinking, "Good, this is like the best thing ever." A stone picker? What do you mean? What's a stone picker? I worked in a welding shop, and I'm very grateful that I got that opportunity to work there. But it also showed me that I didn't want to do that for the rest of my life because it was tough work. I worked on a break and shear, and that's back-breaking work. So I said, "Hey, I got to go to school and figure this out." So I went in and I took finance.
From the peak of Saddle Butte to the depth of the LaPorte Slough, this is the Trent Klarenbach Podcast, brought to you by the Klarenbach Grain Report and Klarenbach Special Crops Report. Today's guest is going to be great. A big fan of this guy. Got introduced to him through a mutual friend. I guess we met a few years ago, but really got to know each other a bit more over this past 6 months. His name is Kevin Hegedus. He's a portfolio manager, managing partner of Q Wealth Partners, senior wealth advisor, founding partner, financial planner with PWM Private Wealth. He's a portfolio manager, certified financial planner with more than 30 years experience helping families and business owners plan, invest, and transition their wealth. He works with clients across Saskatchewan through PWM Private Wealth Counsel and Q Wealth, focusing on clear financial planning and disciplined portfolio management. Kevin spends his time in Saskatoon and also at his his cabin at Wakaw Lake, and he loves kickboxing and working out. I think you'll enjoy this conversation. I'm looking forward to it, and this is great. Kevin Hegedus.
Hey, it's great to hear that. That was a mouthful there, man.
Yeah. I almost got through it.
Hey, thanks for having me on. I appreciate it.
Yeah, this will be fun, I think. I first, a little background. If you don't know Kevin, you've definitely heard his name. The Money Sense radio show has been on the radio and the 65 CK on for how many years, Kevin?
Man, it's 28 or 29 years. I was actually on there even before Mr. Gormley started. And
wow.
It's funny, way back in the day, Trent, and I laugh about this when I used to do that show. I used to record it in the newsroom, right? And there was a telephone on the wall, and it had a little button on it, just like a CB radio. But there was no host, so I was the guest and I was the host. So I was interviewing myself, and I did that for about 3 weeks, and then the station got a hold of me and said, "Hey, you know what? This isn't good. We got to change this. We got to get you a host." So that's when I first got the first host. And then Brent Laux and I have been working together, I think, for 20 some odd years. So he's been
wow.
The host. Yeah.
So you're interviewing yourself. Hey, that's gotta be.
Yeah.
So I did a little bit of that. I did an hour-long video. I just talked into the camera.
Yeah.
And it's not easy to do.
It's not. And it was funny because in the newsroom, there was people all around me. And I remember sitting on this little chair just against the wall, and it was so new to me. And then trying to interview yourself, and the news people are all around you, and they're doing their own thing, and they're broadcasting. And it was, it's something that you won't forget. That's for sure. Yeah,
a good experience. I learned to appreciate a good host. That's for sure. That's cool. Yeah. So I remember listening to you. And it was a long time ago. I remember I was getting ready for these untold riches I was going to make about 25 years ago. And I went and had a meeting with your office. Might have been Dana, actually. I don't know if you and I actually met that day or not, but it was on 8th Street in Saskatoon. And that was probably 25 years ago. You've moved on from that location. And yeah.
Long time ago.
Yeah. One thing I thought was really interesting you did back then, and that you're still doing them today, is those seminars. I went to one of them, and I just forget who was there. This is 25 years ago, but it was something I always found that interesting.
Yeah. I've done financial seminars and workshops for years, and I guess with the internet and now with YouTube and all this kind of stuff, some people you may not get the crowds like we used to, but I'm telling you, people still want to come out and they want to learn. And in a lot of cases, it's a lot of great knowledge for them. So this November, we're actually doing 4 different farm workshops. So it's all going to be about financial planning, investments, but also about what's happening with farmland today, with the values. And I'm really pleased to be working with Tim Hammond. He's going to be one of the keynote speakers there, and we'll be hitting Unity and Rosetown and Melfort and Saskatoon over a 4-day period in November. Yeah, it's going to be some great workshops, some great information as well.
Yeah, it's something that I've worked with Tim. I got to do a little project with Tim here this spring, and that was looking forward to that for about 30 years also. We go back a lot of years ourselves. Yeah, those seminars, it's interesting. I like going to seminars, like going to conferences. I don't always know or expect or have an idea maybe what I'm going to take home from it, but there's always one or two nuggets that hadn't thought of, just got exposed to.
Yeah, and way back when I first started out, I'll just tell you a little story. I had a gentleman who I really respected a lot. I'm still good friends with him. He's also an advisor out of Oakville, Ontario. His name's Richard Charlton. And I remember Richard coming to Saskatoon, and Richard today is about 73 years old, very successful, very wealthy gentleman, and just a wonderful, lovely man. And I remember him coming to Saskatoon, and he was a guest speaker for me. And
Okay.
he showed up in Saskatoon in February to do this presentation. And I remember picking him up at the airport. I think he was looking at me. I was a young kid. I was maybe 24 or 25 years old. And I remember him looking at me, and I'm sure he was thinking, what in the world am I doing in Saskatoon in the middle of February doing the seminar for this guy? And we had two events. We had one in Saskatoon one evening, and then the next evening we're in Prince Albert. So we had a full day to spend together. And this is the cool part about the story. Richard spent the time, he came to my office, and I remember him having this Forbes magazine. And in this Forbes magazine, it listed all the multimillionaires that were invested in Berkshire Hathaway, so through Warren Buffett. And that's where I really got introduced to Warren Buffett and to Berkshire Hathaway and the buy and hold investment strategy and how successful that's been. And I actually had a chance to go to Omaha, Nebraska with Richard, and I attended a Berkshire Hathaway meeting about probably 10 years later. And it was great, again, to spend a weekend with Richard. And I'll never forget being at that seminar. It was in, I guess, a hockey rink or a stadium like that. And they had 4 microphones set up, 2 on each side of the stadium. And people would wait in line for about 45 minutes to ask their questions. And you had Warren Buffett and Charlie Munger sitting on the stage, and they took questions all day long, Trent. Like it was about 6 or 7 hours, and they sat there and answered questions. They took a coffee break and a lunch break, of course. But I remember this one young kid getting up there. He could have been more than 13 years old. And he said his name, and Warren said, "Oh, hang on a second. What was your name again?" And the kid told him his name. And he said, "Oh, was your grandfather so-and-so?" And he said, "Yeah, he was." He said, "I remember when he came into my office and invested $50,000 with me." So that's the mind that Warren Buffett had. And it was such a cool story. And here's this gentleman's grandson, and this kid and his family are multi-millionaires because of the money that they gave Warren way back in the day. Little things like that you pick up in your career. And yeah, that was a really cool memory. And again, Richard Charlton, just taking the time that day to spend with me in the office and mentor me, something I'll never forget.
Yeah, that's having a mentor. I've been fortunate to have a few mentors in my life, and I'm not even sure they even realize it, some of them, but it's, yeah, when I started in environmental consulting, I was told to get a mentor, and then I guess my farming career and what I'm doing now. But yeah, you're very fortunate to get a good mentor like that and to take interest in a young guy. And he would have been probably 50 years old maybe then, or somewhere in
Yeah,
there.
you would have been, like maybe late 40s. So for sure, roughly 20 years older than me. Yeah, for him to take the time out of his day, because he sure didn't have to come to the office that cold February day. He was there to do a presentation in the evening, but he wanted to do something that day. So he took the time to spend with me. And yeah, like things like that, you just, you don't forget. And then I look at my situation now, and as our business has grown, we've expanded and hired more staff over time. But there's a young guy that joined me about I don't know, maybe 3 weeks ago. And he's graduated with great distinction from the Edward School of Business. Wonderful kid. And I was telling my business partner this last week, like, I'm looking forward to mentoring that guy and see him grow up in this business. And I think 4 or 5 years from now, he'll be an advisor with my team. And I'm really looking forward just passing on the knowledge and passing on the torch to some of those young guys as well.
Yeah, it is interesting when you get to a certain age, you really recognize the mentorship that you had as a young man or young lady for that matter. And you want to pass that on. There seems to be, I guess the older you get, your priorities in life change and you really recognize what's important. And mentorship, I believe, is one of them.
Absolutely. Yeah. I agree with you.
Yeah. That's exciting then. So, okay, that conference or seminar you did at 24 years old, was there any other 24-year-olds doing this?
God, I don't think so. I think it was really relatively new back then. And I got introduced to doing seminars from a gentleman out of Ontario that was hosting a lot of them back then. And he said, hey, you know what? You got to try this. And I said, I don't really have the money to put on a seminar because it costs a lot of money because you got to book the venue and if it's a guest speaker, you might have to fly them in or even pay for their time and radio ads. And back then we were doing like flyer distributions to get people out to it. And I remember him telling me, you know what, Hegedus? He said, you beg, borrow, steal, do whatever you have to. And he said, you do this seminar. And I did the first one, Trent, and it was successful. And that's really what helped me launch my career. We ended up with a number of people that we could bring into the office after that, sit down with them, and then start building financial plans for them. And over a couple of years, I got my certified financial planning designation. And today, I've created literally thousands of financial plans in the last 2 years. I've helped hundreds of people retire. And that's what I'm really passionate about, financial planning. I'm a portfolio manager and obviously managing all that stuff is a big part of it. But I tell you, the most successful.
We're having mic issues, Kevin.
Are we?
Yeah, a little bit there. You're checking out a little bit on my end.
Okay.
Yeah, that's better. Yeah, sorry. Could you just repeat that and I'll cut it out?
Yeah. So over the years, I've done literally thousands of financial plans for people, and I've helped hundreds of people retire. And that's what I'm really passionate about. Obviously, managing money is a big part of what we do as well. But the people that I know that are the most successful, Trent, are the people that have a written financial plan in place. They review it every 6 to 12 months and they stay on track. So it's not always everyone wants to buy the next NVIDIA or whatever it might be. We all want to hit it out of the park, but it's having a plan in place. And I think hitting those, instead of hitting a home run, just getting to first base and getting to second base. And that's how people are really successful.
Yeah, it's slow and steady, right?
Yeah, exactly.
Yeah, you get chasing dollars, and I've chased dollars in my life, and just better slow and steady.
Yeah, and I think we all have, and I think sometimes we think that we're going to get to this magic number too, whether it's $1 million in our portfolios or whatever the number is for people. But I really believe that number, it's just a number. What's important is what money can do for you, right? And live the life that you want to have and create the relationships that you want to have, whether it's being able to take your kids or your grandkids someday on a Disney trip or to Mexico and creating those memories, right? And a lot of times I don't think people I call it their personal rate of return. So what do you need for a rate of return to make sure that you can achieve all your financial goals? People don't know that. Do they need 8%? Do they need 10%? Maybe they would be surprised if the number was 5.2%. Yeah. So once you know that number, and the only way you know it is to have that proper plan done for you, then it takes the pressure, I think, off of trying to pick the right stock and trying to hit those home runs.
Yeah.
That's what I think anyway.
Yeah, it sounds reasonable for sure. The sooner you can get control of your time, for me anyways, that's so important. I've been fortunate. I've probably only had a couple of years in my career where I didn't want to be doing what I was doing. And I don't know if that's the case with many, but some of that's come out of financial cost, but getting to that point where you get some control of your time, be able to make some choices how you want to spend your time and spend your energy, which is important. So I guess that's where that financial planning really helps.
Yeah, and you're right. Time's so important, right? It's basically what we trade money for, right? We trade time for money, and it's so valuable. And as we get older, remember when we were 25 years old?
Yeah.
You thought life was going to go on forever. Or remember when we were in high school, right? And you'd have your summer break, and it was just 2 months. But good Lord, didn't it feel like it was just forever? And sometimes you were looking forward to getting back to school in fall. And now you and me are both in our 50s, and you realize just how precious time is, and maybe what's really important to us, spending time with family and building those, I call them memory dividends. Making those memories with your kids and your family. And so I think that's what's really important.
Yeah, absolutely. It was interesting for me, and maybe everybody goes through that, but they probably do. But as I approached 50 years old, I really became aware of my mortality and started with my eyesight. Couldn't see as well. I wasn't healing as good as I used to be able to go hard. And then the injuries started piling up or whatnot. And then my friends started getting sick. Yeah. And some of them passed away. And you're like, oh my goodness, right? It's the time. We don't know how much time we have, but I think it's really, I guess what I've tried to do is focus on doing things I enjoy. And if you can get to that place, that's important. How'd you get, you from Wakaw? I recently met with a family from Wakaw, and honestly, I've only met half a dozen people from Wakaw my entire life. So tell me about what that was like for you in Wakaw and growing up.
Yeah, it's a wonderful community. I think about 1,000 people. And my dad was a farmer, and my mom was a nurse in the local hospital. So we grew up and we were working on the farm. Obviously, that's what happens when you're a farm kid, right? You're driving the tractor when you're 12 years old. And good Lord, back then, it wasn't continuous cropping like we have today. It was 1/3, 2/3 summer fall. A lot of people don't even remember the term summer fall. And I remember Dad saying he looks at that field and it's a little bit green out there. Okay, boys, I want you to get out there, do the summer fall. And we had a lot of stones. We had some rocky quarters as well. So we were the stone pickers back then and picked a lot of stones. I remember Dad coming home one day, and when we were picking stones back then, we had a Ford tractor and it had a front end loader, and you had a stone bolt that you pulled behind it, right? That piece of steel, and you used to put the stones on there and then haul them to the end of the field and throw them off. And I remember Dad coming home one day and saying, "Hey boys, I bought a stone picker." And we were thinking, good, this is like the best thing ever. A stone picker? What do you mean? What's a stone picker? So it wasn't a Rockmatic. It was just one of those stone pickers with a fork in the front.
Yeah.
So instead of walking in front of the tractor and throwing the stones in the front end loader, we walked behind this thing and threw them in the back. Oh. And then eventually he bought a Rockmatic, right? But I'll never forget him coming home and saying, "Boys, I got a stone picker," and we thought we're going to heaven. This is just amazing. So I grew up in Wakaw, and my dad, his father, my grandfather, settled right along the lake in Wakaw. And it's pretty cool, Trent. Like the old house is still there, and it was like a 2-bedroom or a 2-room little farmhouse. And Dad grew up there with his 2 sisters. And I never had a chance to meet my grandfather on that side because he passed away when my dad was 15. So here's my dad, the only boy in the family, 2 sisters, a mother that doesn't speak English. She's Hungarian. And what does Dad have to do? Dad's got a farm, right? Yeah. So he told me that he wanted to be a teacher, but he never had the opportunity to because he had to take over the farm and support his mother and his 2 sisters. So and it's interesting about my daughter's 19 right now, but when she was about 6 years old or so, we were out snowmobiling, and we have a cabin out at Wakaw, and we were out snowmobiling, and I took her to that old farmhouse along the lake, and we went inside, and I remember her looking around, and like a lot of old farmhouses, they've been vandalized over the years. Windows are broken. There's stuff written on the wall, and I was explaining to her, like, this is where your grandfather was raised with his two sisters, and I can see in her eyes, like, she can't believe it, because it's just, I'm sure she was thinking, like, how could a family live in this house, because it's so small. And I remember getting back to the cabin, and we took our gear off from sledding, and we're sitting there talking, and she was upset. And I said, what's bothering you? And she said, did you see what they did to Grandpa's house? And I said, what do you mean? They broke the windows and they wrote on the wall. But it was just really neat to see a kid like that thinking, well, she never even met her grandfather. My dad passed away before I had kids, so she never even had a chance to meet him. But just the emotion that it stirred up in her was pretty unique. You know?
Yeah.
So yeah, that's where that's my roots. So I grew up there and graduated high school in Wakaw, and then after that, worked a few different jobs. And one of them, I worked in a welding shop, and I'm very grateful that I got that opportunity to work there. But it also showed me that I didn't want to do that for the rest of my life, because it was tough work. I worked on a break and shear, and that's back-breaking work. So I said, hey, I got to go to school and figure this out. So I went in and I took finance and cut my teeth at a company called Investors Group, great company, and got some great training from people there. And then after I left Investors Group, I actually opened up the first office for a company called Fortune Financial in Saskatchewan. And over the course of 30 years, Fortune Financial was bought out, turned into Dundee Securities. We got bought out by Scotiabank and then by Industrial Alliance. And just in the last 20 to 24 months, I actually broke out of that bank world, if you want to call it that, and I joined a company called Q Wealth. And it's a partnership. It's made up right now of 26 partners right across Canada, managing about $6.5 billion. And it's really different, Trent, because you have a seat at the table. You're a partner in a company. You can collaborate with like-minded people right across the country when we're building investment solutions for our clients. So it's been a real breath of fresh air for me. And after being in the business for so long, the last 20 months is almost like me starting over again and creating something new again. So it's been really cool.
That's interesting. Yeah. Just I'll touch on the last comment of starting something new again. For me, I find a lot of fulfillment in starting something new, starting something from scratch. It's almost more fulfilling than the end result. When you, that make any sense? I don't know.
Yeah.
Maybe,
yeah.
But it is for me a little bit.
I think it's the challenge, and sometimes you get stuck in that rut, right? And you're doing the same thing over and over again, but it's the challenge. It's being mentally stimulated again. That's what I'm enjoying about it.
Yeah. It's the journey too, right?
It's the journey.
Yeah. I guess I get bored fairly quickly. Maybe I don't like the stale feeling of not being challenged and not pursuing. So that certainly resonates with me. Okay. So Q Wealth, your partner there. So the structure of that is, and I don't know the finance structure, so I'm learning this because I have an interest in it, but I don't understand.
Yeah. So I guess the analogy that I would use is I would compare it to, let's say, a law firm where there's different partners in that law firm. A lot of people in my industry, when they move from one dealer to another dealer, they also get paid to do that. They get a signing bonus. So sometimes you see guys jumping from one firm to the next, maybe because they're getting paid, right? The unique thing about Q Wealth is they don't write anyone a check to join. And there's even talk after we hit 30 partners, it'll have to be a buy-in. So now you've got people joining a company for the right reason because they want to do something special. They want to do something that they perceive as better for their clients. And they want access to different investment products and solutions that aren't in that typical bank channel. So that's what's really cool about it. And it's an interview process. So when I joined Trent about 22 months ago, I had to get interviewed. So I had to sit down with 6 partners. A lot of them were a meeting just like this. And I got grilled. Who am I? Where am I from? What's my background? Why do I think I deserve to be a partner? What do I think I can bring to the table in this partnership? So they really want to, and they should do that. And it's important to vet your partners. It's no different than if you and me owned a McDonald's franchise and we were taking on a third partner. We want to vet that person. We want to make sure that they're a good person and they're going to add value to our business. So the same thing happens within Q Wealth. Q Wealth was started about 19 years ago, give or take, by a gentleman by the name of Larry Berman. Larry has been on, I know you know Larry, he's been on BNN for I think 17 or 18 years. And another gentleman by the name of Jared Rabinowitz. And Jared is just a fantastic guy. He's our CEO. Super, super intelligent dude, but he's just a really good human being. So I got a lot of respect for him. So there's a lot of great leadership and just the ability to collaborate with 26 other partners, meet with them once a month and share ideas. And you know what's different, Trent, is when you're a partner, you want to, like I sat on different investment committees over the years, but even though you're a colleague with someone in the same company, you're not really a partner. You don't want to share the secret sauce because they're also a competitor, right? Even if they're down the street from you in Saskatoon, they're still a competitor. As a partner, everyone is thinking about collaboration because everyone wants the partnership to be better. How do we build a better company? How do we build better experiences for our clients? And I'll just give you one more quick example and then I'll shut up for a minute. But I've got some clients in Parkville, BC, so on the island. And they're an older couple that moved from Saskatoon out to Parksville, and they're not really good with the internet. So I needed some documents signed and they just didn't feel comfortable signing them through DocuSign. So there's a gentleman by the name of Jake Steele, and he's a partner in Q Wealth. His office is on the island. Phoned up his office. He said, yeah, no problem. So he had his assistant meet with my clients, come in, help them sign everything, found them an accountant there to make sure that their taxes are done properly. And there's no compensation for Jake. It's just being a good partner and providing that service to someone else. So it's totally different, a different feeling than what I've been used to in the past.
Yeah, I think it's so powerful to collaborate and not necessarily compete all the time. When I was in my environmental consulting business, I didn't feel I needed to grow organically. I would go and, in fact, I didn't even want to deal with the clients. I'd rather just work for you. I'll make a little less. Everyone's happy. You get the job done. And it was just a collaborative effort like that. And there's also the referrals that went along. Yeah, I understand I really appreciate the whole collaboration, the partnership idea. That's really neat. I see Stacy's been posting a lot about future proof, and you were down at that conference in the States. I don't know if you want to talk about it. If you don't want, we don't have to talk about that, or if it's
I'd be happy to. It was really cool. This is the largest financial conference in North America, and it was in Huntington Beach, California. Over 5,000 people attend this over a 3-day period, and it's all on the beach. So think about the beach lined up. They've got it carpeted, so I guess ladies could walk there with their high heels on if they wanted to. But everyone's in shorts and t-shirts and sunglasses. The vibe is incredible. And there's all these booths set up, hundreds of booths all over the place. So anything that you want to get information on, whether it's investment solutions, tax solutions, if you want to learn about the latest AI technology, everything is there. And then there's 4 different stages that they had set up. And it was nonstop presentations. So you could say, hey, you know what, at the Oceanside stage at 2:30, I want to go see this guy talk about X. Then you could go there. So it was pretty amazing. And then at the end of the beach, You walk through all these different booths and stuff. They had this huge tent set up, and there's 1,000 tables in there. And think of these 24-inch tables with a chair on each side, and it's like speed dating. So you could book a meeting with someone, and it was a 15-minute meeting, and maybe it's someone from Vanguard or from a different ETF company, or someone that's selling or promoting the latest tax software, whatever it might be. You could book a 15-minute meeting with them, and then after that, decide if there was a fit and if you wanted to pursue it. So I would say, Trent, this sounds great. When I get back to Saskatoon, can you send me your email and we'll continue the discussion? But what was pretty amazing about it is how loud it was. So think about the buzzer goes off, and then there's 1,000 tables, so 2,000 people start talking.
Oh yeah.
It reminded me of fall out at Wakaw when the geese and the ducks are flocking up, ready, waiting to fly south. Yeah, really amazing conference. So there was 5 of us on our team that went down for it, and just a lot of energy. Everyone came back really pumped up and with some great ideas. So yeah, it's going to be an annual thing that we end up doing.
Yeah, that was on my radar. I think you had to qualify. You had to be an advisor or
yeah.
And it was something that I was always thought, geez, this thing looks really neat. So when Stacey was posting those, those posts on LinkedIn on social media, I thought this is really cool. So I thought that was neat. You guys were down there. So
I'm sure next year, if it's something that you wanted to attend, I'm sure I could try and get you in as a guest.
Oh, is that right?
Yeah. You'd get a lot out of it.
Yeah. Yeah, I listened to, was that Ritholtz put that on or who? Yeah, I listened to that. We listened to that podcast quite a bit, I think. At least I do anyways.
Yeah.
Yeah, interesting. It's just a different take, I guess, on the stuffiness of the old stuffiness of the financial world, right? Or the banker world.
Yeah.
Okay, so what's next? You guys got Q Wealth has some funds, I think you were telling me about that the reason I'm asking about this is I think it's really cool that someone has a fund.
So they've done a really interesting job. It's open architecture, so you can offer any type of investment to the client. So whether it's stocks or bonds, anyone's ETFs, but what they've done is they've created some of their own private pooled funds. So it sounds cool because it's private pooled. It's private in the fact that the only people that can invest in them are Q Wealth clients. So you can't go to a different broker and invest in them. So you have to be a Q Wealth client. But what they've done is create a few different amazing products. And I'm going to explain a little bit about what I mean by this. So if I look at, I'm just going to use Vanguard as an example. A lot of people have heard about Vanguard before. Vanguard is an ETF that we use in our portfolios, and we use it, frankly, because it's very cost effective. So I can buy the Vanguard S&P 500 ETF, and I pay 0.09 of 1%. And what a lot of people don't realize is Vanguard is a non-for-profit. There's no shareholders in the company. So you think about if we were shareholders of a bank firm, we really could care less unless we bank there if they charge someone $300 a month to have a checking account or 3% to own a mutual fund. All we care about as shareholders of that bank is making as much money as possible. Vanguard is non-for-profit. There's no shareholders. It was started in 1975 by a guy by the name of Jack Bogle, and he had this dream about creating this company. Today, they manage over $10 trillion. They're massive. They're massive. So when I think about Vanguard and that particular ETF, as we know, the S&P 500 is made up of 500 companies. So why are you investing in it? Because it's diversification, right? I always use the analogy of not trying to find the needle in the haystack. If you're buying the S&P 500, you're buying the whole haystack, right? So you got a better chance of success. Q Wealth has taken some of that same philosophy, and they've built some private pools around that philosophy. So I'll give you an example of one of them that is very successful. It's called our private debt fund, and it's about a $600 million private pool. And a lot of people have invested in different private debt funds in the past, But what's cool about this is there's 45 different funds within this fund. So it's a fund of funds. So if one of them doesn't turn out, you've got 44 other investments to pick up the slack. So they've taken that same concept of diversification, just like the S&P 500, and they built a private debt fund around it. They've built a private equity fund around it. So they've built these other different types of pools that would be difficult for a lot of people to invest in unless they had a serious amount of capital. And who oversees that? Andrew and I build it, but Larry Berman and another gentleman by the name of Alfred Lee, who's our Deputy Chief Investment Officer, oversee it. So every Thursday morning at 10 o'clock, we meet with those two fellas to talk about our fund. And we'll come up with an idea. We'll run it by Larry and Alfred. They'll do some due diligence on it, and they'll come back and say, hey guys, this looks like a great idea. Or you know what? Maybe you didn't think of this and this, and you still want to put it in your fund. So you're running it by some very seasoned people and another couple sets of eyes as well.
Yeah, because it's not, the average person can't invest in these opportunities, private debt or private equity opportunities. So maybe what we should do, we might have some listeners here who are not familiar with those two terms, and just highlight, maybe talk about how difficult it is. Those opportunities,
Sure.
they're difficult to find, difficult to vet.
Yeah.
Investing in debt's something altogether different.
Yes. So our private debt fund, and private debts is exactly what it sounds like. It's private loans. So a business owner can go to the bank and they can borrow money, or they could seek out a fund that might manage hundreds of millions of dollars and they can borrow from them. So why would they want to do that? Maybe they don't want to wait 3 weeks for the bank to make a decision on that loan. Maybe there's an opportunity that they want to access very quickly. So they might seek out a fund in that respect. Another asset class that's in here is infrastructure. Now, when you think about infrastructure investments, these are things like investing in bridges or toll roads, those type of things. So these are huge infrastructure projects. And the company that we use is called Northleaf. They're out of Ontario. Their largest customer or client is the Canada Pension Plan. So it's $5 million to get into this fund. Even if someone had $20 million, Trent, and they're ultra wealthy, they probably wouldn't put $5 million in one idea. So what we're able to do is pool clients' capital together and take a piece of that and put it into the Strategic Assets Fund. And in there, you would own things like cell phone towers, fiber optic networks, cargo terminals, EV charging stations, even laundry mat facilities. So think about laundromat contractors and think about the laundry machines in hospitals and hotels and maybe correctional centers. So those are the type of things that we're investing in. And they tend to, I guess it's boring assets to have, but it's very stable. And if there's a recession, I don't think you and me are giving up our cell phones or unhooking the internet to the house, right? So these are the things that we need to run our daily lives. So it's pretty cool that we've built that all into one fund, strictly available for PWM clients.
Yeah. How do you do valuations on public infrastructure or private businesses, for example? There's some challenges with that.
Yeah.
Or what's your methodology for that?
Those funds will go out and value those businesses. So they'll hire a company, it might be KPMG or Myers Norris Penny, whatever it is, to do the valuations every quarter.
Okay.
And then you'll see the value of the fund, so the NAV, they call it, the net asset value of that fund, usually changes every month or every quarter, but it doesn't change daily. When you look at publicly traded companies, they tend to trade daily and they can move around a lot in a day. And when everyone is running for the door and wanting to sell, a lot of times they're pushing the value of those public companies down. And that's why you get so much volatility in the public stock market. And the reality is, if you look at all the businesses in North America that make over $100 million or more, 87% of them, Trent, don't trade on the public markets. So there's a tremendous amount of wonderful companies out there, but most people have no idea how to access them.
Yes. Right. Interesting. So these companies, would they be approaching the fund itself in order looking for equity or looking
Yep.
or for debt? Yeah.
Yeah. Yeah. You might have a company that is looking for capital for different reasons. It might be looking for capital to expand, but maybe it's a CEO of the company that started it when he was 30. He's now 62 years old. He's grown this business from infancy, and maybe it's worth 70 or 80 or $100 million. So he's looking for a monetization event. So you will have private equity that will come in, buy that business. Typically, that business owner will stay on for a certain period of time, like maybe 2 or 3 years, and then exit the company. That private equity firm will then put in management, and they will continue to grow it and eventually find another exit strategy for that business, which might be to another competitor, or maybe it gets IPO'd and it gets taken public, and that company now trades on the stock market.
Okay. So my challenge in my life is I don't understand financing. I'm always impressed when, how did you guys finance this deal? You guys just raised $10 million, $100 million. How did that happen? How does that happen? So I guess with that comment, I'm not sure where to go with that from now, but there's also, I guess that's one way, right? You find a partner with a fund, or you raise equity, or you find someone to give you that debt. And I guess that's the big thinking picture, thinking in the big picture. Right?
Yeah, and when you look at these alternative investments, whether it's infrastructure, real estate, private equity, private debt, whatever it might be, it's going to form a portion of someone's portfolio. It might be anywhere between 10 and maybe 20% of a portfolio, as an example. So it's not that you're putting all your money into this. You still want to have publicly traded stocks and bonds in the portfolio. And I look at the Canada Pension Plan, and I remember when I started my career years ago in the 90s, people saying Canada Pension isn't going to be around. And we all heard that. And then I remember in the early 2000s them saying, it will be around, but we're going to be paying a lot into it because you've got that older generation that's going to be drawing on it. So the younger generation has to put more money in. About 25, maybe 27 years ago, Canada Pension Plan looked a whole lot different than it does today. So back then it was 100% government bonds. And they looked at that model and they said, hey, you know what? This is not sustainable. So interest rates were on the decline. There's no way 100% government bond Canada Pension Plan could carry the load for all those people that were retiring. So CPP made a decision at that time, and they went out and hired some of the best portfolio managers in the world to manage CPP. And if you look at it today, you have publicly traded stocks and you have publicly traded bonds in there, but you also have infrastructure, real estate, private equity, private debt, all those things that I talked about. That's what's built into the Canada Pension Plan. So by having some of those other things in your portfolio, what does that do? It smoothens out the ride. It allows people to stay the course, and they're not jumping every time there's a correction in the stock market or some news headline that comes out and scares them off of the big plan. And again, getting back to my original comment earlier, having that written financial plan in place and knowing what your rate of return, your personal rate of return number is to hit your financial targets is so important.
So the whole private investment idea, I want to circle around back to that a little bit. So there is an enormous, and you might know the statistics in North America, but there is an incredible amount of businesses that are going to transition out of ownership in the next 10 to 15 years.
It's unbelievable. I can't remember the stats, but it's a very high percentage of how many North American businesses are owned by people 55 and older.
Yeah,
unbelievable.
Unbelievable. So all these businesses, they're either going to close the doors, and a lot of these businesses are successful businesses.
Yeah.
Successful businesses. But to buy a business, it takes financing. You're a young person in the 20s willing to bet on yourself, stick your neck out. You look at vendor financing, maybe that's an option perhaps, right? But like, how are these businesses, maybe, I'm not sure if that's the right way to address it, but the challenge I see is how these businesses are going to be financed for a transition.
Mm-hmm. And I think that's where planning comes into place, right? Because if you're 55 years old and you think that you're going to sell that business in the next 5 to 10 years, don't wait 6 months before you're ready to sell. Have that plan in place sooner than later. Maybe it's your employees buying it out. Maybe you're financing someone to take you out over time, right? So there's those options. But the last thing you want to do is, I guess, two things. First of all, not know the value of your company. So we have a tool that we use to value businesses and farm businesses and so on. But the second thing is to make sure that you do your planning well in advance. Even if you think that you're going to sell it 5 or 7 years down the road, what if you get ill today?
Yeah.
The last thing you want to do is be forced to make a decision and end up selling that business that you worked your life for at 30 cents on the dollar because you don't have a buyer lined up.
When I was getting interest in my company and I was getting ready to sell it, I was told 3 to 5 years, you got to plan ahead. Get your ducks in order in your business so it's attractive to somebody. A lot of businesses, I think, are successful, but maybe not structured, or maybe even poorly missed. Maybe there's room for improvement on the management side of things, just because it has to be, you really want a turnkey operation for somebody, like a fund to invest in you or someone to take it over, I think. So, yeah.
And just making sure that you have all the I's dotted and all the T's crossed, right? So we have some pretty cool strategic relationships and some pretty cool strategic partners. MMP is an example. We rely on MMP for a lot of our high-end planning. Ron Brown is a friend of mine and one of the partners at MMP, and Ron as well. Great guy. We'll bring Ron in on a lot of our cases. Allison Katari, she runs Bridge City Law. She's the lawyer that we work with, making sure that we have simple things like wills and powers of attorney in place, right? But just having the proper structure in place to make sure if something happens to you, all your bases are covered. And what we've really created is, I guess you'd call it a multifamily office, where we can bring all these different strategic partners together under one roof to look at a person's situation. So not only investments, but we've got tax, we've got legal, we've got insurance in place. And all these partners, strategic partners, working together, collaborating to build the best possible plan for that client so that they can achieve the best outcome.
Yeah, it's so important. You want to be able to sleep at night, and you don't want to leave someone with a bag they're holding.
Yeah.
Yeah, interesting. Kickboxing. What drove me to that?
Yeah, you know what? I played hockey until I was about 45, and my knees started hurting. I took martial arts way back in the day, like a lot of us did when we were younger, when I was in my teens. But then my son got into it as well. And I would go down and take my son to a class, but there was an adult class at the same time. And I'm thinking, geez, instead of just sitting here waiting for him to finish up, why don't I just start this class? And I'm telling you, Trent, it was one of the best things I've ever done, not only physically, but mentally. So I train at Shears Martial Arts in Saskatoon, and Troy Shear, who owns Shears, wonderful gentleman, him and I have become very good friends. And physically, it's been great for me. I've met a lot of great people there, so I still have kind of the camaraderie as I did when I was playing rec hockey with the boys and sitting around the dressing room. I met some great people. So physically, it's been great, but mentally as well. And I don't know, if anyone hasn't tried martial arts, you don't have to think about this as you're going out there and being in a combat sport, a lot of it is just training on a heavy bag and just learning different maneuvers and so on. So I really enjoy it, and keeps me young. I still spar every once in a while with the young guys. These guys are probably looking at this old man, what's he doing here? But I enjoy it, and they're very kind to me. So you never have to worry about going home with a broken nose or a black eye.
Yeah. Well, my son, he's into mixed martial arts out in Vancouver. He's all over that stuff.
Yeah, it's cool.
Let's talk about the mental aspect of it. We understand the physical, but the mental is a little more difficult to see.
Yeah, I think mentally you're competing against yourself, right? So it's not a sport like hockey where you've got 10 or 15 other guys on the team. You're competing against yourself and seeing if you're getting better at it. It's pushing yourself. There's a lot of times in February, there's a 7:00 class in the evening, and it's cold out, and you're like, geez, do I really want to get off the couch and go to this class? But you push yourself to do it. It's the discipline behind it as well. Yeah. So I think from that aspect, mentally, it's been so good for me. Keeps me focused, keeps my mind sharp. And I think as we all get older, we have to find things to keep us active, both our brains and our body. And martial arts is one of those things as an older person, you can continue to excel at. You just have to pace yourself. I don't think I could play hockey anymore, but I can still do martial arts.
If you're kickboxing and doing martial arts, I think you can get around the ice. Fair enough. There's a lot of guys playing hockey aren't kicking a bag. I know that. Oh, okay. So your kids are they growing up in the business, or what do you think they're going to end up doing?
Yeah, my daughter, she's 19. She's second year university. She's taking education. She wants to get a psychology degree. So her goal is to maybe be a counselor in school and work with kids that way. And then my son, he's 17. He's in grade 12. Big, strong kid, like a lot of 17-year-olds. He's lifting weights and he's got the V body to him. He wants to be a personal trainer. So he already got into kinesiology at the U of S. So he'll take that next year. I had aspirations of one of them or both of them getting involved in the business with dad. But you know what? They want to do their own thing. And that's perfectly fine. If things change down the road and they ever want to join me, that's great too. But like I said earlier, I am looking forward to mentoring some of the younger people that work for me today and hopefully watch them grow up in my business as well.
Yeah, that'd be fulfilling for sure.
Yeah.
Dana, your wife, I guess, she's involved in the business, and I have it on good source told me that she's the brains of the operation.
She is. She absolutely is. Yeah, her and I have worked together for about 25 years now.
Yeah.
And she's got a marketing degree and background, but she is really the heartbeat of that company. So she's our HR department. She deals with a lot of the stuff that I'm not good at dealing with. As your company grows and you have more and more staff members, everyone has issues. I have issues, you have issues, people have issues. So a lot of times she's kind of like the mother hen, and they end up going to her, and she deals with stuff. And she's wonderful at it. She's way better at it than I am. But I would say one of the smartest people I've ever met in my life. So I'm pretty fortunate to have her not only as a life partner, but a partner in my business as well. Yeah. She's been great, and her and I have built something really cool together. And it makes it fun. We go to work together, but at the same time, she's in her office doing her own thing. There's a lot of days where we go to work together. I say, I'll see you later on tonight. And I don't see her all day, but at 5 o'clock or 6 o'clock when we're leaving, we drive home together. And then we can still catch up on the day, even though we work in the same office. How was your day? What did you do today? And so on.
Oh, that's great. That's great. Yeah. That's a great situation. Yeah, I'm still old school. I still use the term wife, but I think it's partner. I think is what we're supposed to. So I didn't mean any disrespect.
Oh, no.
Yeah. Anyways, that was, I was told, she's very big part of the organization. So,
He is, yeah.
and that's good. Is there anything else you want to? You got this series of meetings coming up. I plan on going to the one in Saskatoon. I'm
Perfect.
hoping that I guess I'll go as long as it's not taking up a seat. But I think it's gonna be
You're
fun,
more
Trent.
than welcome to come. And we're running 4 events, right? So it's going to be Unity, Rosetown, Melfort, and Saskatoon. And they go from November 5th, 6th, 7th, and 8th. The Saskatoon event is going to be a morning. The other ones are all, I guess Melfort's at 4 in the afternoon, but Unity and Rosetown are at 7 o'clock at night. But the Saskatoon event starts at 9:30 in the morning. And it's going to be a great event. So I'm speaking at it. My business partner is speaking at it. Tim Hammond. So people that are wondering about what's happening with land prices these days, Tim's going to be giving us some insight on that. Ron Brown from MMP is going to be there, and Allison Katari from Bridge City Law as well. So tons of great information, and yeah, we welcome everyone out to those events.
Yeah, I'm looking forward to attending. So I got it marked in my calendar.
Right on.
I really enjoyed this, Kevin. This is great. And yeah, thanks for coming on the podcast here and sharing your story with me.
I appreciate it. Thanks for having me. I'm happy to do it anytime.
Yeah, this is great.
Thanks.
Okay, thanks.
Financial planning services are offered through PWM Private Wealth Counsel. Portfolio management services are provided by Q Wealth Partners, a registered portfolio manager, investment fund manager, and exempt market dealer. PWM Private Wealth Counsel is an owner and partner in the Q Wealth Partnership. The information discussed in this show, including any opinion, is based on various sources believed to be reliable but subject to change. The opinions expressed in this show are opinions of the individuals, and they have not been approved by and are not necessarily those of Q Wealth as a firm. This is not legal, accounting, tax, or investment advice, and should not be relied as such.